revenues.
Okay, let's talk about ICICI Pru Dynamic, another interesting theme. But what I've seen is that over the last 6 months, your focus has shifted to holding more large caps in the fund versus a multi-cap approach earlier. Is that to mitigate the downside risk to returns?
See, in November, December, while mid caps and small caps fell, we couldn't get actually weightages significantly in many of the stocks. This is a fund which has a AUM of more than 4,000 crores. So, and we need to collect meaningful weightages in many of the stocks. And there was no liquidity in many of the small and mid caps. So we actually bought during the downturn actually a number of large caps because those stocks were available in the kind of quantities we required in the fund.
Energy is your top holding in this fund. Has the thought process essentially been value and under ownership?
Yeah, certainly we would like to buy sectors where the cycle is down, and energy is one of the sectors where cycle is down. As opposed to that, we are underweight consumer auto names and names like the cement industry, where we believe that margins are at all-time high. So that's the reason. But we've been increasing our weightage on many of the exporters because we believe that that's a story which is likely to play out in the near term.
All right. You had stated earlier that, sometimes in a down market you increase your cash levels to protect the fund and its returns. But as far as the mandate of this fund is concerned, you're also allowed to invest in money market instruments. Now, how do you take that call on whether to increase your cash holdings or whether to safeguard returns by investing in money markets, G-Secs or corporate debt?
See, within the debt space, what products to invest in, we take the help of our fixed income people because they are best equipped. What has happened apparently in the recent past is interest rates both in the short end and the long end have been high. And normally the short end interest rates are much lower than the long end interest rates. Then you look at the longer term products. So because of this situation, we've been choosing to invest only in shorter term debt because they have been giving you very good returns. And as far as the equity debt mix is concerned, this is a fund actually as the market falls, we keep buying, and as the market rallies, we keep selling. So it's not as if we take a call on the market, but as the market keeps falling, we keep buying. So this is not a fund which creates cash at the bottom of the market. This is a fund which actually tries to create cash at the top of the market.
All right, the next fund is ICICI Pru Top 100. Now, again, the concentration of this fund has been to sectors like IT, pharma and energy, which essentially highlight your conviction in these three sectors. Particularly for IT, what's been the key conviction point?
See, a key conviction point has been the valuations have corrected. The valuations are possibly at lows in the last 5 years, except in the post-Lehman period. And you have a supporting macro in the form of high trade deficits and current account deficits. So we thought that the sector is very attractive from that point of view. And if you look at it, the way we are positioned in this fund, this is a fund which takes macro sector bets. Whereas we have our flagship fund, Focus Blue Chip Fund, where we don't take too much sector bets. We try to look at stocks within the sector. So in this fund, the Top 100 fund, we actually decide these are the sectors to benefit from. And today at this point of time, technology and pharma head that list.
The reason I talk about technology is because you have a sectoral fund on that sector as well. And, the major chunk of the returns is coming from the mid-cap technology space. Even though your weightage has been more focused towards, some of the key marquee large cap companies. So how do you go about strategizing or positioning yourself within the sector?
See, we look at market caps, and what we found was that the large cap technology companies had very high market caps. And therefore we said that we should be invested in the small cap companies where the valuations were also attractive and the market caps were also attractive. But at this point of time, given the fall in the tech sector, this is one of the most attractive funds in our basket on a thematic basis, where we believe valuations can very easily expand in the next 1 year. And that's why we've been actually recommending to people. Of course, there are standard risks which apply on all thematic funds. That continues to apply to this fund.
And telecom continues to remain a contrarian call because that's also one of the holdings in this fund.
Yeah, as we have always believed that, telecom as a sector.
Despite all the controversy.
See, for us, always, for any investor, Warren Buffett is his guru. And you find that actually at the depths of problems, he invested in GE, Goldman and Bank of America. So he doesn't wait and invest when things are fantastic. That's not the way you make money in equities. In equities, you make money when things are bad. Like what worries me at this point of time is investors have no longer looking at equities as an attractive asset class because they have seen 5 years of not much returns. But today the markets are much safer than they were 5 years back, and systematic investing over the next 2-3 years should yield very good returns.
The market is volatile and the economic environment difficult. It's not easy to strike the right balance between risk and returns and manage investor expectations simultaneously. So how have the funds Naren manages fared, and should you be invested in them? Mutual fund expert Dhirendra Kumar answers that and more on the other side of this break.
Opportunity comes knocking every minute on ET Now. ET Now gives you more stock ideas from the best technical analysts every day and talks to the management of the most promising companies. Breaking stories that impact your investments. Make every opportunity a profit opportunity from 8 to 10:30 a.m. only on ET Now.
You know, my friends always tell me that they have to buy a ticket to see me, that I'm too busy. But there's always time for gossip.
Now I can have all my friends in groups on my home screen and stay updated.
Tell me everything. But they still have to buy tickets.
New Nokia Lumia 800 with Windows Phone.
If experience counts the most, Rajat Bose's analysis can reap you the richest dividends. Get the most accurate predictions from the charts veteran on Buy Now, Sell Now, only on ET Now.
Okay, I'm really disappointed. I've seen the Pepsodent Dishum film.
Candy खाते हो, chocolate खाते हो, ये खाते हो, वो खाते हो, सड़ जाएंगे, दांत सड़ जाएंगे.
All in all, I think it doesn't work. Really, what doesn't work in the film? I think the message comes through. I don't like the acting. Nothing works in the film. But I'm willing to bet on this one. Just put it on the evidence. If this doesn't work, then you're going to tell them to us, get the share of the business. Therefore, before they do all that, if this doesn't work, I'll get out of the advertisement. That's the deal.
Dishum तो Pepsodent का काम है ना?
Okay, if it doesn't work,
नहीं यार.
you know what to do. But if it does work, I'll buy you a bottle of champagne.
Brought to you by General Air Conditioners, the Extreme Machine. Reliance 3G. Switch to Reliance for the fastest 3G experience. Dell XPS 13 Ultrabook. Crafted to perfection.
Welcome back. Today we are discussing the equity schemes of ICICI Pru AMC, and joining me on the show right now is Dhirendra Kumar of Value Research to discuss some of these schemes. Dhirendra, it's very good to have you on the show. Let's start by discussing ICICI Pru Discovery. It's a value-oriented fund. What's your view here?
One should be aware, beware of the downside which this fund has. That it could be a test of patience sometimes, and in lean times this fund crumbles. But looking at what it has done over the past 3 to 5 years, it has proved to be very rewarding. It has moved up the quality chain, or on the quality scale of the underlying portfolio. So this is a very impressive fund, but it comes with its share of volatility.
What do you make of the risk-return profile of a fund like ICICI Pru Dynamic?
This has been an impressive fund, and it has been fairly actively managed. And I think it is a very difficult fund to manage because it is truly dynamic. One is that it is supposed to change its allocation. In lean times, it is supposed to be, if the fund manager thinks that the market is about to crumble, then he's supposed to go heavily into cash and fixed income. Even depending on the state of the market, the equity portfolio is supposed to change. And it has worked out nicely so far, but I'm quite skeptical about, too many changes it is too actively. The dynamic fund is too active, it's just not a simple long only fund. It's not a large cap fund, or it's not a mid and small cap fund, or it's a multi cap fund. The underlying portfolio has to change at all times, including the allocation. And this fund has been impressive, but this fund is something which one should be keeping an eye on in terms of sustaining its performance.
What's your view on a fund like ICICI Pru Top 100, which has gone through a few changes?
This fund is among the oldest fund which was launched by ICICI Prudential. It started as ICICI Prudential Growth Fund, and recently it has got itself more finely defined that it will be the investing universe will be top 100 stocks by capitalization. And from that standpoint, I think this will be a more predictable portfolio. This will always be a large cap fund, and this is going by its history is redundant. It's not relevant because now it has got more finely articulated. But this has been an impressive fund in its old time. Its recent performance after its name change and finer articulation of its objective, I think we have to allow it some more time. Coming to options available to investors in the large cap universe, I think there are superior options, including ICICI Prudential Focused Blue Chip, which has made a name for itself over the past 3-4 years.
Also, Dhirendra, what's your advice to investors who are looking to invest in large cap funds at this point?
One is that large cap funds should be the mainstay of any investor. It should be a sizable part of your portfolio, of your long-term equity portfolio, and mid and small cap stocks, or the kind of fund we are referring to in the form of a discovery fund or something like that. That should not be a significant part. That apart, I think there is a dearth of choose a well-performing fund with a credible track record, or settle for an index fund. Don't settle for anything which is a below average, because the value addition which can be derived from a large cap fund, a good part of it can well be derived even from an index fund.
ICICI Pru has a number of sectoral funds in services, banks and technology. What mindset should an investor have while investing in a sectoral fund, or while deciding on which sectoral fund he should be investing in?
If you invest in a sectoral fund, there are only two reasons why you should have it. Either you find that your existing portfolio is low on something about which you are very upbeat on. You are upbeat on technology and your portfolio doesn't reflect that, or you are upbeat on banking, your portfolio doesn't reflect that. So have it to supplement your existing portfolio, and otherwise, and don't make sure that you are never loaded onto this. Don't try to construct your portfolio by combining sectoral funds only. Many investors attempt that, and I think it's a risky strategy, because you lose out on a couple of things. One is that you pay full price for your sectoral fund management as well, and you get only part of it. I think the great delivery, the value you derive from getting your fund managed is that you entrust your fund manager to choose sectoral calls, and here you have taken the call yourself.
Thanks very much, Dhirendra, for giving us your views on these funds. With that, we come to the end of this edition of the show. Thanks very much for watching. Do send us your feedback and suggestions.
Opportunity comes knocking every minute on ET Now. ET Now gives you more stock ideas from the best technical analysts every day and talks to the management of the most promising companies. Breaking stories that impact your investments. Make every opportunity a profit opportunity from 8 to 10:30 a.m. only on ET Now.
They've helped millions of investors make profitable trades in the market. Their daily advice will help you make the right trading calls. India's top technical analysts appear only on ET Now. Always thinking markets.
Open your trading day with technical calls from the market wizards who have made money for millions of investors. And as markets close, let India's biggest technical analysts show you winning stock picks for the markets tomorrow. Only on ET Now.
Hi, I'm Abhimanyu, and I'm challenging you to the ultimate tech show ever. Here's a unique opportunity to work with global organizations and conquer real business challenges put forth by leading CIOs. Can you design an enterprise social platform that nurtures innovation within a company? Can that platform nurture ideation, create crowdsourcing opportunities, and encourage collaboration? Are you the best techie in India? Presenting the Capgemini Super Techies Show, a path-breaking interactive reality show for IT professionals to prove their tech factor.
Open and close the markets with the top technical analysts in the business. Ashwini Gujral and Mitesh Thakkar. Only on ET Now. Always thinking markets.
This is the Times Television Network, and you're watching ET Now.